It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, the wealthy investor, and welcome back to another episode of Trading Stocks Made Easy. We are just a few days from our big event in Maui, Hawaii, and I am so excited to meet each and every one of you who've actually signed up and are going to be spending 3 to 4 days with me in Maui. You are going to love it. Plus all of the surprises. I like to refer to that as my inner Oprah, by the way. And you'll learn what those are on the first days. Hey, listen, this week's episode is all about getting rich quick, right? Not. All right. So if you know anything about the stock market right now, what is happening? We're in the middle of a massive pullback that has gone on for a while. This is very uncharacteristic of the market, but we have a series of events that have kind of met up together to cause the market to pull back. Now, this pullback that we're having right now is going to end at some point. And I've been saying to all my students, whether you're a digital student and you study with me online or you come to my live classes, what is your plan? So let's talk about what causes markets to pull back from time to time. The events that cause a market to sell off, where certain stocks get sold off significantly, right? Some people call it a crash. I don't like to look at it as a crash. I like to look at it as a pullback. All pullbacks eventually end, and that's why in the last 30 or 40, 50 years, a lot of people have gotten wealthy. So how do you take advantage of a pullback? Well, now is the time to look at the big names that you would like to own because they were too expensive, let's say 6 months or a year ago. So when there are companies that you have your eye on and you wish that you could have purchased shares, now is the time. The people or the group of people who take this approach are called value investors. Now, Warren Buffett is largely considered to be the best investor in the history of the stock market. We know about him because he owns several publicly traded companies and he loves the insurance business. Right? Okay, so value investors wait for opportunities like this, and then they slowly enter the market, getting shares at a discount. It's no different than being a value investor in real estate, buying houses that need to be fixed up. You fix them up, you sell them, you flip them. Well, we do the same thing in the stock market, except we don't need lumber, windows, or subcontractors. Whenever we have a pullback in the stock market, one of the reasons that stocks sell off is because there are a certain group of stocks that have run up too quickly and they've gotten ahead of themselves in terms of revenue and valuation. In other words, if your company is only making $10 million a year and the stock is selling for $700, that stock is way overvalued relative to the amount of income that you have coming in. And that's why we saw some huge pullbacks over the last 6 months, because even though the market bid the stock price up significantly, it was ahead of the company's earnings. Not good. Not good at all. So when people start to see that a particular stock is really running, it's only natural to say, I should own those shares because if those shares go radically higher, I could get rich. What you don't know is that when there are companies, particularly if they don't pay a dividend and the stock has gone up 100% in the last 52 weeks, you as a retail investor are going to get burned. Why? Because we're all capable of a little something called greed. And when you get greedy in the stock market, trying to get on board of a stock that has tremendous momentum, you're ultimately building a house of cards, and that is not good. So what have we seen over the past couple of years? We've seen companies like Shopify, which, by the way, is a great company, small float, and those shares went, we're talking now on a split adjusted basis, from $11 to $152 within a 3 to 5 year period. That is a huge, huge, huge run up. But when the market started to pull back because of geopolitical circumstances, what did the big institutions do that you didn't do? They placed a stop-loss order in place. Now, a lot of times you'll hear me talk about big money, banks, insurance companies, right? College endowments. Don't forget, they get burned too because sometimes they get greedy. The difference is while they're buying 1 million shares of a stock that runs up, you're buying hundreds of shares of a stock that runs up. And because you don't know the pattern and you're not really watching the revenue, you just hope the shares keep rising, you get in on the act, but you have no plan in case the stock reverses sharply. And that happens all the time. So institutions, banks, insurance companies, college endowments, they place bets and they lose money. The only difference is they can afford to lose $50 million in one trade. You can't. So you have to be aware in the next 52 weeks of greed. Not greed necessarily in the outer world, but greed in your inner world. When you're at home trading alone, your brain says that stock is going up very quickly. I need to own more. It never says, wait a minute, something is happening here too quickly. And when that happens in the market, that's why on this show you never hear me talk about these growth companies, because you can lose too much money putting your hard-earned money in a company whose stock price is suddenly shooting up. So you've never heard me in the last 2 years talk about Shopify. I think the stock went too far, too fast. And I love the company, and I think they're brilliant at what they do. But when that stock price is rising the way that it did, danger, danger, danger. The other one we have talked about on the show was called GameStop. Remember that one 2 years ago when a lot of people really lost their shirt? And who lost the most in GameStop? Mostly younger people who were new to the stock market who didn't believe in getting a financial education. They believed in getting rich quick, and they didn't have the experience to say something is wrong. So isn't it funny on this show when you hear me talk about Dow stocks or S&P 500 stocks? These are the stable companies that have been around. Whenever there's a pullback and their shares drop, what are we waiting for in these bigger names? Something called retracement. And when you look at the majority of the Dow Jones Industrial Average or the S&P 500, because these companies pay dividends, what happens? Their shares retrace. Now that you can build a strategy around. Okay? So when I talk to you about investing, we're talking about holding shares of something for 5 years to reap the benefits. When we're talking about trading, we're trading on what? Stable companies that have great revenue and dividends. If you're not doing that, you're trying to get rich quick and you're about to lose a lot of money. Don't let that happen. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Thank you. Today we're talking about getting rich quick, which never happens in the stock market. And if you do it once and you use the stock market as a gambling hall, that is a bad habit. You see, wealth is nothing but a series of positive habits. This is the other reason why you've never heard me mention on the show cryptocurrency. Why? Well, right now, people are taking a bath because cryptocurrency like Bitcoin has reversed in value significantly. Again, you can sit alongside the big institutions, but you're simply not using the tools and you don't have the sense of history that they have to make a lot of money. So when they exit a position, you can't exit with them because you don't know the warning signs. I'm not saying that there are not people who have not made a fortune in cryptocurrency and Bitcoin. they have, but most of them are experienced players. If you're a novice or retail investor who wants to learn how to produce residual income with their money, you really need to learn the wealthy investor approach. So what I thought I would do here is share with you 3 of my top secrets for success in the stock market. And I know some of you have been listening to this show for 5 to 8 years, and you know that I'm telling you the truth when I introduce you to a formula that is conservative and has proven itself over time. So my number one secret, which I talk about all the time, is developing a millionaire's mindset. Now, what does that mean? Well, if you want to learn to be a millionaire, you have to learn to think like a millionaire. And what do millionaires seek? Systems that have been proven over time. So if you want to be a stock market millionaire, where do you want to put your money so that you're better off 5 years from now from where you are today? Into companies that are proven. I've talked to you about Amazon.com on the show. I've talked to you about Microsoft, because those 2 companies are the leader in not only software, but also in the cloud. Now, the cloud is something that's with us that is not going away, and it includes a lot of things. I always say to you, don't buy the stock if you don't understand the story, right? So Amazon.com has been publicly traded for over 20 years. They have a track record. You can look back and look at the history of revenues. Microsoft, the same thing. This company has a history. So if I were new to the stock market, I'd be looking for the companies that have proven histories and results delivering returns for shareholders both on the top and the bottom line. You see, picking stocks is not difficult once you have a system and a discipline in place. What a lot of people do is they get some extra money and they go to the gambling hall and they think because they pick a couple of stocks and brand names that they know that they are really good investors. I can tell you it just doesn't work that way. So tip number 1, learn to invest like a millionaire. In what? Companies that have a proven track record, being public, increasing dividends, top and bottom line increases. That's the first thing. Number 2, in life, it is your job, it is your responsibility to learn how to create residual income. You are not going to get rich in 6 months because you pick some no-name stock. It may work, but if that stock does not pay dividends, there goes the residual income. Sometimes in the stock market, we call this paid to wait. So if I buy a stock, there's several stocks that I like right now that have annual dividends of $7 per share. That means while I'm waiting for the stock to go higher, dividend checks are being sent to me at home. Residual income is the key to self-made wealth in today's world, hands down. Wouldn't you like to start a business once and get paid over and over and over and over again? Well, we like to invest in the Wealthy Investor Program in companies that have what? Residual income streams. So let's think about this. Doesn't Amazon.com have a residual income stream? Well, the answer is it doesn't have a residual income stream. It has hundreds of income streams, right? So Amazon Prime is their biggest income stream. Once you join Amazon Prime, you are billed every single month. That represents billions and billions of dollars to Amazon.com, and they give you some privileges as a result. So Amazon.com doesn't have to constantly go out and keep looking for new clients. Why? They have hundreds of residual income streams built into their business. So when that stock price rises, you as the investor are the benefit of the residual income streams that they've created. The reason I'm the wealthy investor and I'm not the wealthy hardware store guy is because the hardware store business has no residual income to it. Right? So every time someone comes in and has to buy a hammer, I need that person to come back and buy another hammer or another product, right? So therefore, it's going to be hard for the hardware business to explode. But if you're a SaaS company, software as a service, what is that? You license the software, people pay for the upgrades, they pay to learn how to use the software. There are different versions of the software at different levels, and software companies can do very, very, very well. So if I'm investing in the stock market, I must learn the company's residual income streams, because that's how the company's revenue is actually going to grow. My third secret for success, which I'm going to pass on to you. Are you ready? Always hang out with people who are smarter and more educated than you are. Always hang out with people who are smarter or more educated on a topic than you are. Why? There's no shame in saying, how does that work? What does that mean if you're hanging out with someone who's richer than you are or owns multiple business or what have you? You want to hang out and associate with people who pull you up, even when you're not trying to be elevated. Their habits, their thinking, the way that they see life, their viewpoint, slowly, if you spend enough time with them, becomes your thinking and your viewpoint. You see, people who are successful should be a positive influence on you. You can talk to them about their field of expertise. Why? Most people who are really successful are happy to talk to you about their field of expertise and the nuances in that business. So every time I think about maybe buying a new business or adding a new stream to my existing business, I always want to know from someone who's already done it at a higher level. If you don't hang out with successful people, or let me phrase it this way, if you're not in the habit of hanging out with people who have more education, more money, and more intellectual skills and know-how than you are, then you're not moving forward. You see, life is all about progress. Progress in your thoughts, seeing new things, learning. The older we get, the more we learn, the smarter we become. When you hang out with people who are fear-based, guess what's happening? Your thoughts and ideas are being encouraged to stay small. I was talking to someone not too long ago about a new business stream I wanted to add to one of my businesses, and they said, that'll never work. And I said, really? Isn't that interesting? Why do you say that'll never work? They were just like, well, I have a feeling that that's not going to work. That market is too saturated. Oh, okay. Have you invested $100,000 in this new field? No. Do you know anyone who has? No. Oh, so you just have a hunch? Yes. Oh, and you just have your feelings because you're not a risk taker. Why would I take financial advice from someone who doesn't take risks and who has no knowledge of the field other than reading something on Google? They have no knowledge of the field that represents a 7-figure opportunity. So I have learned to not listen to people who've never engaged in risk taking. Now, when you engage in risk-taking, you may lose some money, but how much do you learn? A whole bunch. So I love every opportunity that I can to get around people who have more money than I do, more success than I do, and more education. Now, the education part is interesting because that doesn't mean that I hang out with people who have PhDs. Right? It's not that kind of education. I like entrepreneurial people who are self-started, who've learned from their mistakes. Why? When they're successful, they love to share the same way that I love sharing with you. Someone said to me not too long ago, well, if you're the wealthy investor and you're making so much money, why do you have a podcast? Why do you have a website? Why do you give away a free ebook? Because I love sharing with other people, in part because I know what it's like not to have. As I've talked about many times on this show, I was raised by a single woman, and my mother and I struggled to pay the bills every single month. And I couldn't understand why we were stuck in this cycle until I became about 17, 18, 19 years of age when I wanted my own money. And I knew immediately in my late teens and my early 20s, I wanted to be rich. I just have to learn how to do it. I had to learn the habits, and I had to learn a system that allows you to get there if you don't have a lot of money to start. Do you get that? Right. So today I have the life of my dreams, living in multiple cities, traveling constantly, meeting interesting people, the new foods, great new hotels, and I love it. But most importantly, I love helping you. Why? Well, it just so happens that my personality makes me a natural sharer. If I find something good, I want to share it with my best friends in the world. And I consider you to be one of my best friends. So whenever I reveal a system through my online courses, for example, whenever I reveal a system of trading leaps options in and out of the money, I'm going to share that system as long as it's proven over time. When I discover the beauties of writing covered calls or selling call options right before a dividend is paid, I'm going to share that with you at either online at trade school or in one of my courses, right? Because that's just my natural tendency to share. Now, I'm not telling you that I'm as big as Tony Robbins or Oprah Winfrey or any of your other heroes or sheroes, but I have made an impact on the world, and people listen to this show all over the world, and I'm very proud of that. So, what does this all mean to you in the next 3 months? First of all, get your brokerage account open. If you haven't opened a brokerage account at TD Ameritrade, what are you waiting for? Why? Because although we've had a colossal pullback in the stock market, those of you who are entering the market now, you're entering at a bottom. So when retracement happens in those Dow stocks and those S&P stocks, you're going to think this is the greatest thing in the world. For those of you who've been listening to me for years and you're wondering what's going on in the stock market, the cycle that we're in right now is not going to last. We're going to see the market go bullish very, very soon. In fact, the last 7 trading days have been extraordinary. Just invest putting your education at work. Stay with the stocks right now that pay a dividend. Stay with the stocks that have at least a 10-year record of delivering top-line revenue and that Wall Street favors. And stay with stocks that maybe they haven't gone up 100% per year, but maybe they've gone up 100% over a 5-year period. That's good. That's steady Eddie growth. You deserve to be rich. You can be rich. You can have financial freedom. You must be the type of person who has an open mind. And if you're listening to the show, particularly if you make it to the end, I know that you're patient, you are smart, and you have an open mind. You just need the financial education to take you to that next level. And when the market pulls back, you're not losing, you're learning. Remember that. I'll see you next time, right here on the next Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.